So again, welcome everyone. Thank you for coming here today. So I'll be sharing my experience and my thoughts on my market profile today and how we can use market profile for trading Forex. So first of all, my website is tradingwithvenus.com. Okay, so during this live trading, essentially we'll be looking at, again, in the context of market profile, how do we read price action quickly and easily, and how do we identify trades based on this method using market profile. Then we'll look at some entry and exit levels, and then how to properly implement this strategy so we can actually make money using this. And then last of all, but a very important step is how can traders get the best use of this methodology, and how can you cut your learning curve into half? A quick disclaimer as we get started here. I am not this is for educational purposes only. I'm not an investment advisor. If you have any questions about your own investment needs, individual needs, please do go see your investment advisor for that. Okay, first of all, a little bit about me. I am a Forex trader. I've been trading live for the last 7 years. In terms of my education and my background, I have 2 MBA degrees, I have an Ivy League MBA degree, so I understand the financial markets. 1 MBA from Cornell University in the US, and another one in Queen's University here in Canada. My background is in computer systems. I have an undergraduate degree in computer systems. So a lot of my market knowledge and stuff does come from actually knowing the financial systems. And in terms of my past experience, I worked in financial industry for many years. And before that, I was an entrepreneur, and I ran an IT consulting company that I later sold. So in terms of my personal life, I have a family. I have 2 kids and a dog, and my husband. So that's kind of a bit about me. And why do I do this? Why do I trade? I am very passionate about trading. I have I've done several things in my career. However, I find I always come back to trading. Trading is something that I'm just, it's just in my blood now. I really, that's kind of what I want to do. And I am looking for other traders as well. I'm trying to build a community around myself. I find trading to be a very solitary experience. It's hard to sit there and trade on your own all by yourself. So I like to have other good quality traders around myself. And that's what I'm really looking for, is finding a core group of people who are passionate about trading. It's not just about making money. Making money is very important. That's what we are here to do, of course. However, you have to have a passion for it. When you have a passion for something, the results that you get are just very, very different than if you just kind of went in there to make money. It's like any other job. It's a career. So if you go into a job just trying to make money, you may just end up hating it, and which is not what we want in this experience. So that there it is about me. And now let's move on to the market profile. In terms of market profile, we have, what is market profile? Let's start there. So market profile, essentially, what you're looking at here is market profile. It's a visual representation of price, volume, and time information. It essentially tells us where price spent the most amount of time and how it moved for that particular day. So this is just the last one. This is euro dollar. This is the last one that we had. And then price, of course, is on vertical axis here. This is the price. Normally we see on our charts. This is where the price normally is. This is the time. As the time progresses, this is where we see a chart building. And the market profile gets built during the day as the price progresses during the day. And then essentially, what does the market profile tell us? The main important thing that market profile tells us is where the market is accepting the price. So where do we have the most number of sellers and buyers engaged in the market during that day, for example? And then where it's being rejected. So for example, here we see price got rejected pretty heavily and the price moved down. And then we saw at the bottom here, the price got rejected and the price started kind of going back into that equilibrium state where it started establishing the fair value. Okay, so a little bit of background on market profile. It was devised by Peter Stadelmeyer. He was a trader at Chicago Board of Trades, and I think he was there in from the 50s, late 50s to about 80s or so. It is based on statistics. So if you like, you know, very qualitative analysis and actually quantitative as well, you like to really, you know, you want to understand why the market is doing something. So this has that mathematical background in it. It's based on statistics, and it follows a normal distribution curve, which is also called the bell curve. Essentially, what that means is that price will stay within 70% of the time. The price will follow this bell curve, which essentially looks like a bell. So most of those values are within one standard deviation of the average. So basically, there's an average price that gets, so if you look back here, this is the average price where the market is spending a lot of time. So within one standard deviation is under normal market conditions, that's what you're looking for. So if you measure the top from here, you would essentially expect the price to come down the same distance from the top of this line as it is from the bottom. So that's what the bell curve normally says. So 70% of the time, that's where the price should spend its time. And then value area is where there are equal number of buyers and sellers. So essentially, the value area is the peak where price spends the most number of time. And the reason the price is spending that much time in that area is because there are equal numbers and number of buyers and sellers coming into the market. So for example, let's say you are looking to, or someone's looking to sell, in this case, the euro. So you have someone on the other side wanting to take that trade. So that is your equilibrium or average price where, you know, it's in balance. The market is balanced. So anytime there's a buyer, there's a seller associated with, and vice versa. Market is not in an equilibrium state when we have this type of stuff. For example, so we saw too many sellers come into the market, and then the price just dropped. So this is a trending market. Okay, so why should we use market profile? So first of all, it is a multidimensional representation. So most of the indicators that, I'm not a big indicator person. I trade mostly price action. I like price action. I like looking at market to charts to see where the price is at any given point of time, how it's reacting to those levels. I'm big on support and resistance levels. So how the price is reacting to those levels and where the price will go, is likely to go next. Of course, in this market, we never know where the price will go. All we can do is make an educated guess on where the price is likely to go. And then even so, we have to be open to the direction, because the price could do, you know, whatever it wants to do. We as retail traders are a very, very, very small part of the market. 95% of the market is institutional traders, hedge funds, banks, and other places like that that have that are trading on behalf of someone else, or, you know, there's other activity coming into the market that's driving the price action. Retail traders do not drive price. We have absolutely no control over where the price goes. Bigger financial institutions have some control over the price, because they can push the market around depending on you know, how much orders they have, for example, depending on the order flow. So how much business they have to conduct, they can move price based on that. So market profile is one of the few indicators that actually tells us what the price is doing and how the price is reacting at what level, and also the number, or I would say volume. However, volume in the sense that how long or how many people have actually, or how many traders have, buyers and sellers have transacted at that particular moment in time. So I was asked the question, there's no real volume in Forex, which is very true. The reason there's no real volume in Forex is because we don't have a central exchange. So any of the equities market, if you take a look at the stocks market, NASDAQ, Dow Jones, DAX, any of those, there is a central clearing exchange where all the orders flow through. So in those markets, those are, they're real, like you can tell how many orders came in, what price they bought and sold at, and how many sold at or bought or sold at that price. We don't have that kind of in-depth information in Forex. We can get volume information from our brokers. However, that is really, it depends on the broker itself, how much volume is running through their systems, and that's what a lot of times they are, the information that they're sending us. However, in case of the market profile, we don't really care in terms of how many orders were there. What we're trying to see is how much time the price spent at that particular price point, and that's what will tell that, and that will give us the information on what the market is doing. And that's really what we're looking for. So, for example, when we look at our charts, your chart will look very similar to my chart. So we may have a couple of pips divergence in terms of where your price went to as opposed to mine. But in real terms, it will be the same. Like my price will not be very different than the price you will see on your charts. And that's how we're using the volume information. The price is the price. Doesn't matter which broker we look at or which charts we look at. So we're not really taking into consideration the exact number of orders that came in. We're just monitoring the order flow in terms of where the orders are coming in. And that's the information that we are looking at, or we're trying to gauge from the market profile. Okay, trending versus range-bound markets. It is statistically, market is range-bound. That's what the stats tell us, that most of the time market is range bound, because there are, whenever somebody wants to sell, there's usually a buyer at the other side, or sorry, yeah, there's a buyer at the other side, and vice versa. If you're looking to buy, there's a seller on the other side. So there is this fair price that gets established in the market. So anytime a market is in that fair price range, it will go to the 70%, the standard deviation that we looked at. So whatever it is, the one, you take a look at what is to the top, that's what you'll see to the bottom as well. So basically, if the market has started from the top and came to that middle point, the fair value point, you can then look at a bottom as well. And that's where, if you measure and mark that area, that's essentially where you expect the market to react and come back towards your point of control or fair market value. So that's a range-bound market. And trending market is what we saw, what I had over here. This is a trending market. So essentially, if we had this to the top, we would expect that to the bottom here as well. And we would normally expect price to react around this area and go back to this level, which is the fair market value price. However, in the trending market, what you will see is what's called a double distribution. There will be a big gap in the middle, and that's essentially what dictates that it's a trending market, and then we'll look at where to look for continuation of that trend. And that's the information that we're trying to gauge. Okay, so it can help us establish tops and bottoms. It can help us establish levels to trade from. So these are support and resistance areas. And one, you can just visually look at the chart and mark your support and resistance areas on a plain chart, which is what I normally do. However, you can get confirmation from your market profile, and then you have that confluence of those areas. That then gives you a higher probability trade area to trade from. And again, it's robust across time frames, so you can use it on a 30-minute time frame, which is traditionally what was used in the past. and you can use it on your 15-minute, 5-minute, or a 1 hour, 4 hour, whatever time frame that you're looking for. So it is robust in that sense. It works across multiple time frames. Okay, so let's go to our charts now and take a look at, so this was all the theoretical part. So let's take a look at how this works now. Okay, so this is our market profile. Like the picture that you saw, this is actually the exact picture that I put in there. So this again is price. This is price like we saw. And this is the different areas. These are the volume and the time that the price spent at any particular area. So here, as we see, and this white line, it essentially goes to, so we are looking at the highest peak that we can find, and then we draw a line across that. That is a point of control. At that point is the fair value. This is the point where it's the mean of or the average price. This is where most buyers and sellers came in play, where anytime there was a seller, there was a buyer on the other side of the transaction. So this is your fair market value price. So now, according to statistical analysis, 70%, which will be one standard deviation, will be kind of around this area here. And same to the other side is where you would normally expect the price to go to. So basically, based on like the economic theory, what happens is when the price becomes too expensive, the sellers will, more sellers will come into the market, but the buyers will leave the market. So if we talk in terms of offers and bids, there are more people, wanting to, so let's say, sorry, we're looking at the buying, for example. So if we have more buyers, for example, price is moving up. So we have, as the price is moving up, it's because more buyers are coming into the market, and they're pushing the price up. And as that happens, those people that have their trades, they have money in the trades, they are thinking, oh, this is great. Now I can get out of my trade and book some profits. So sellers will come into the market. The more price moves up, the more sellers will start becoming interested, because now they have more profit in their trade. If this was moving all the way up here, the more profit they have in the trade. And then more sellers will come into the market, which will then cause the price to drop, because they start taking the bids. They start taking, all the transactions start happening, and you'll see the price come down. So according to statistics, we should have 70% is where the price should react, and then we should have 70% to the bottom as well, which will give us a range-bound market. So the market will always come to the mean or the average price. So between statistics and economics, that's what we are looking at. Market will always come to a fair market price. So for example, let's say you were selling, my economics professor really liked tomatoes, and he always gave tomato examples. So I will use the same. So let's say you have a tomato to sell, and or a bunch of tomatoes to sell, and you're looking for buyers on the other side of the market. So as you're selling your tomatoes, people start coming and they want the tomatoes. So you sell one at $1, and next one you start seeing people lining up. You raise your prices, so you sell another one at $2, and still there are people wanting to buy your tomatoes because maybe there are no other tomatoes in the market. So the price keeps going up, but at some point, those buyers will think, okay, this is way too expensive. I don't want tomatoes. I'm going to go eat something else today. I'm not going to interact with this price. I'm not going to do a transaction at this price. And that's where you see those limit orders leave the market. And this is what happens here in terms of trending markets. All those limit orders, normally that would be sitting here. For example, this is a support area. So just like we talked about, our standard deviation here, in this area, there will be support. And normally we would expect the price to react here. This is a 20 level, and this is your 7100 level. Normally we'd see, if you look here, there's a support level coming in at 7100 level. You would expect the price to react because there'd be limit buy orders sitting at this place. However, what happens is we see a market just take out take out those orders, and then we'll see a huge drop in prices, and that tends to happen. This was the news, so that tends to happen before the news as well. The people don't want to be in front of the news, so they're not wanting to buy just ahead of the news. Then we just see a vacuum that gets created, and the price drops like this, and then we end up getting this double distribution kind of trending markets where there's activity up top, which gives us these peaks up top, and then we have activity at the bottom, which gives us the peaks at the bottom. So is this making sense so far? Do you have any questions or comments so far? Am I just talking too much economics and stats? Do you guys have? Let's start with this. Is this making sense? Can somebody tell me? Okay, it's good. All right. So now let's take a look at how do we trade? How do we trade using market profile? So first thing, so two different things. There are two different types of profiles that generally set up. One is a double distribution, which essentially means you have two bell curves, one at the bottom and one at the top. And when you see two of them, that means we are looking at a trending market. So when you're looking at a trending market, what are you looking for? Somebody put something in the chat box. What exactly are we looking for when we're looking for in the trending market? Where do you expect the next move to be? Does somebody want to put something in the chat box? Where are you looking for the next move to be in a trending market? Okay, looks like we have a very quiet group. So in any kind of trending market, we are looking for the next move to be a continuation of the trend. So essentially, if this is, let's say, if this was based on this one, it looks like it's a trending market. So we would expect the next move to be a move down because we have this. So if this is the trend, then we're expecting the next trend move to be in the direction of the trend, which would be low. Okay, perfect. So here, the way market profile can help us is identify that area where we can expect the price to come to. So in a double distribution market profile, it's really easy. So there's this vacuum that gets created where the price just moves down inefficiently, basically it just drops through that area. So this is the area where we can expect the price to come back to and react. So we would just draw our little rectangle here, and we'll be looking for someplace in this area where we'll see the price react. Yes, sounds good, Art. That is right. We would be looking for trend continuation, and we would not be trying to take long trades. Or if you're taking a long trade, then you have to be careful because we are looking for trend continuation in these kind of markets. So actually, there's one that reminds me of one thing that a lot of times traders don't know which way to place their trades. So the price is here. And a lot of times, many people will get confused. So what are you looking for? We could be looking for, like, how do you decide which way to go now? And that is a big issue in trading, just identifying the direction of the market and how to look for a trade. So in this case, in the trend kind of market, we'd be looking for a pullback, and then we'll be looking for a drop, continuation. Normally, we don't see a lot of, and also another, actually a quick pointer is if you see the price sit in some place, so let's say there's a trend move like this, a big inefficient move, and you see price just sitting there, whether it's a move up or move down, and you see price sitting there, it's a good indication that it will continue. Okay, good question. Why a pullback? Because most of the times we don't see market just blow through in one direction. You will never see market just continue without any kind of a pullback. Normally, the way the market behaves will be in a stair-step type of thing. So let me see if my pencil thing will work here. Let's see, let's draw. So normally you will see move up and then move down and then another move up and then move down. And that's just normally how the market behaves. So you'll see something like this and like this. That's just how it is. Like if you look at any of your charts, you would see this is like the general way the market will move. So that's what we are looking for. So if it's a move up, then we look for a pullback and then continuation move up and then pullback and continuation move up till it gets into that area. Yeah, sounds good. Okay, perfect. So in any kind of a trending market, that's what we would be looking for, is a pullback. So so that's why there's no reason to get, so market profile can essentially help you with that, right? So you're looking for a pullback. So pullback, this box that I have drawn here, this is a vacuum where no trading activity took place. So essentially there were no buyers that came into the market, or there weren't enough buyers to really make a difference. And that's why we saw the price just drop, right? Had there been buyers at this place, we would have seen price actually stop and react and maybe push back up. We saw no buyers at all, so price just drops with this. So how do we look for areas of pullback? So here, so look for the vacuum and draw your rectangle there. So somewhere in this rectangle is where we're looking for the price to pull back to. And usually, if it's a really strong trend, you will see price maybe just come up to the top of this rectangle. And even, like we could pull the rectangle even lower as well. And then you'll see that a rectangle is not working. But even if you drew it like right up to here, because that's really where the price, where this stair step thing started. So we can see this lines up with this one. So that's a good indication that the price will kind of, it starts rejecting here. So you're looking for any kind of rejections, pins, and that sort of stuff in this area. So, and also then you see there's 80 level sitting here, which is normally a very good level for price to react to. So that's another confluence. And I like confluence. I like multiple things coming together to tell me that this would be a good higher probability area for taking a trade. So that's another level. And then we could also see price come. See, this is a previous level where the price reacted. And we can see price come all the way up here as well. So we just don't know how much pullback there will be. So we have to start looking for rejection areas. So normally we'll see price come up to here. If it's a really strong trend move, it will just come to the top of this area and then make another leg down. Or if the trend is maybe not as strong, we'll see a deeper pullback, maybe 50% of this candle, of this big one. And we'll look for the price to just move down from there. Or we may see the worst case here is we'll see the price come to the top of this rectangle here. So see the previous resistance, and we can see the price move down from there. So that's how you can use market profile to identify, one, where the trend is. So here we can see there's a big gap down, double distribution. We're looking at a trending market. Anytime there's a double distribution or triple distribution, you're looking at a trending market. And then you're looking for price to go advance in the direction of the trend, but you're looking for a pullback first and then the continuation move down. Okay, any questions in terms of the trending market here? And then you'll see this, looks like this doesn't go away. So this is a difference, so let's just ignore that. So that was New Zealand dollar. Sorry, actually, I made a mistake. I said euro. This is a New Zealand dollar 30-minute chart. And then if you see on the Aussie dollar, we see similar sort of setup where we have this kind of double distribution. And within that, looks like there was some price. There were some buyers that came in, as you can see by this kind of display here or graph in the market profile. And then we saw price. This is what I was talking about, that price may come to the, like anywhere in this gap, in this area, the price may pull back, and looks like a lot of times you'll see price pull back like 50%. So in this case it did, and which was also our previous support level. And you can see the price has moved down from that. So this applies across different, this is pound dollar 30-minute chart. So as you can see, we saw a big move and then we saw price pull back. In this case, we didn't have a clear double distribution like the other one did. So price, we saw the price come back all the way up, and that's where the price reacted. So the double distribution is essentially a trending market. All right, so now let's take a look at a profile that is a single distribution, something like this. So this, anytime you see a single distribution like this, it's a range-bound market. So in a range-bound market, you will look at where your point of control is, which is the fair market value, and then you're looking for price to the top. So there are two different things. So one is the standard deviation, which will be your 70% of your bell curve here, which is right here, and then to the highs and the 2x distribution, which will be generally your high of the day. So this is here. So that's how you will basically look at. You will just look at where the fair market value is, and then you will plot your two lines, the move to the upside and move to the downside. And this is where you're essentially looking for price to react to. And then the following day, when you go into the market, you can look at, if you see the price coming to the bottom edge of this profile, you would look for rejections like this. I don't like to trade anything blindly. I like confirmations. So here you see pins rejections, and that is excellent. So you look for a move up, essentially at the bottom, and then you will look for the price to go to this level. So you always look for profile on your left-hand side, the previous profile, previous day's profile, and that's what you're looking for. So you're looking for this place to be the first reaction point for the price, and then you're looking for, so this is how you get your levels. Remember I talked about levels, how do you put your levels on? So you're looking for point of control, which is your highest. So I have this marked here, but you can draw this on your own. So just draw a line through the highest peak, and that's your point of control. So you're looking for point of control. The previous point of control tends to be a nice place to kind of keep an eye on as well. But the previous, this one here, from the last, like yesterday's profile, that's what you're looking for. Price to go to this level here, as you can see, and the price went right up to here before it dropped. So this is how it comes in handy. So you're looking for what the price did on the previous day and where the profile is set up, and that's your first level. And then if the price is at this point of control area here, so you will look for, once the price holds above the point of control, that means the buyers are in charge. Buyers have established that price as a fair price that they're willing to pay. So they're willing to buy at that price. And a lot of times these are big financial institutions. So if a financial institution is willing to buy at that price, it's good for us to know that, so that we can align ourselves to that. In my experience, it's not a good idea to fight financial institutions. They have deep pockets. They can, they know where their orders are coming in. So if they are buying at that place, it's a good indication that market may go there. So you could, over the point of control, you can buy, and then and this is like on a 5-minute chart. Go down to your 5-minute chart, and then look for point of control to be price to hold above, and then you would buy, and your first target would be this target right here, and then second target would be up here to the high, where the high was on the previous day. So that's what you're looking for. And then if it continues to be a range-bound market, then you're looking for this point here to be the first take profit, and then you're looking for the second point here to be your first take profit. So in this case, and when you start seeing rejection in an area, that's where you want to just close your trades or take most of your trade and move your stop to break even, so you can get book something in the trade. And on a 5-minute chart, like for example, you would see this set up way more. So for example, here, like on a 5-minute chart, that's why I like to look at my 5-minute chart, see how you start seeing these rejections. And when the price isn't going anywhere, like this is a really nice rejection, nice pin to the top. This candle engulfs the two candles up here as well. So this is good rejection, and you see that price or like chances are the price doesn't want to go up, so then you can get out of your trade and get into the direction of the market. So it doesn't look like the market wants to go above this point. That's where you start looking for the price to go down, and you're looking for price to come back to this point of control. This is where the most of the activity happened, and you're looking to take your first profit here, and then the second one to the bottom here. And here we saw a pullback, and then prices eventually dropped. So that's what you're looking for essentially. You want to look for a price action to support you with this. Okay, any questions or comments on this? Okay, let's. So we talked about a trending market. This is your range-bound market. So I'll look where the point of control is established, which is a fair market value price, and then look to measure this move here, for example. And then you're looking for essentially the same target to the downside. So you'll be looking for 33 to the downside. And as you can see, this came pretty right on the dot here. It moved 33 pips, and you saw a reaction off of that. So if you're looking for a target to, let's say you saw this move happen and price came into the point of control. So once you see this kind of a pin here, that means price is holding below the point of control. That means the chances are it's a higher probability that the price will go to the downside. And if you want an indication of where you can expect that price to go to, it will be the same amount of move to the downside from the point of control, which is this. So that's how you trade a range-bound market using market profile. All right, so that's what I have. Any questions or comments on that? On how to use market profile in your trading? And you know what, this is like, it takes some practice. It takes time. It's a newer concept. Normally, market profile was used in other markets. So you can trade your like equities market, your NASDAQ, DAX, and other things like that using the market profile. And that's where it really came from. Now more people are started using it trading Forex, and I find it actually it's quite helpful. It does take some training. You have to get used to it. It's something new, and like anything else, you just need some work on that. Okay, so let me see if I can actually erase this.
Ramon?
Yeah.
Can you put that chart back?
Chart, yeah.
The one that was on there.
This one over here?
Yeah. See, there's 1, 2, 3 days, the market kept going down.
Mm-hmm.
I'm wondering if there's a way with market profile to keep in sync with that, because otherwise it's gonna be like day trading using the daily market profile. But I mean, you do have to go to the higher time frames, but then the market profile won't show up on anything higher than I think an hour. It doesn't show up on my 4 hour.
You may have to adjust it on the indicator. So like, for example, right now it's not showing up on my 1 hour, but it's in the settings where we can adjust it.
Oh,
and
okay.
I can show it to you after. But that's a good point. So higher high. So it's been trending, right? Slightly going. It's kind of range bound, but the ranges have been moving down. So it's been kind of trending down. So that's a good point. So here's what you can see from market profile. So look at the market profile. Market profile has been moving down as well, right? See where the point of control is? It's up here. And then the point of control moves down, and people stay down, like price starts trading down here, and then the point of control starts moving down. So in terms of the technical analysis, look how price is moving, makes a high here, and then lower high, lower high, lower high, lower high. And if you look at market profile, the highs on the market profile are lower as well, which corresponds to the high of the day. So this is a good indication as well that you can look at market profile and see that the point of control one is moving down, And then secondly, that means more people are doing transactions at a lower price point than they have done previously. And here we saw price move up, so, and the point of control stayed up top, right? And then once it turned, once it did the 3-point kind of setup here, and then the price moved down, came back to test this box that we have, which is a 70%, and then fell. So we see that the market profile starts to move down, and it builds as the price builds. So once the market opens on Monday, we'll see this starting to build as well. And the way you use it, you start marking these levels, the lows here, and these are the levels you'd be looking for when price starts moving. Those are the levels you're looking for. Like for example, this level, I'd be looking for price to come back to this level, which is very close to the 7,100 level. So the price could pull back into this level. However, it looks like the move is quite strong, so it may not pull up as much, and that's why that box that we had drawn here comes into play, because if the move is really strong, we'll see the price just come to the bottom of that box and then just turn. Okay, so let's go back to our so one step that I believe is the most important step that most people don't do, and I highly recommend everyone does, is looking at this every day. So when the day is done, mark your charts. Mark your charts as to where you think the price will go next. So if you are using market profile, draw your box. Draw your box, because this will be the indication as to where the price will come to next. So do that step where you go back in your week. I do this every day. So I will go take a look at what happened that day. So I take a look at where the setups happened. So for example, this setup that I was talking about, this level came from right here. This is where the level was coming from. And as we can see, the price came in, tested the same level. So I will mark this level and see what kind of trade setup I got on the lower time frame. So if I'm looking to go to my 5-minute time frame, I am looking to see where, what kind of setup was present. So for example, I will mark this setup here, for example. Let's make shapes right here. So this here is a very good setup that I like. This is good. So I will mark this up and say, where it's set up. So this is very nice setup, and what the price is doing at that point, and what the market profile was doing at that point. See, this is where majority of the transactions happen. And at this point, as we can see, there are pins on both sides, which means there are enough buyers and sellers coming into the market, and they're willing to, and the market is not going anywhere, because it is that state of equilibrium where nothing is happening. And then you start seeing more rejections. And once you see big rejection like this, and it gets engulfed, now the price may start coming back to this point of control. So this is where your level would be to take some profit. And here, as you can see, price reacts at this level. And we haven't even looked at the technicals. This is just based on the market profile. You're looking at the point of control. This is where the highest level, the highest peak was, and that's where we're looking for the price to react to, and it does. And then, your second target would be towards 70% here, or like towards the bottom here. And as you can see, this is where the price got very close to that level. And actually, let's just draw a line here. So this one, it didn't quite get to it. It's just a little bit higher up here, which was the 70% mark that we were talking about. It got to that, and then you look, next level would be looking for the lows here. And then the price moved down further, which would come from your previous levels on your profiles. So that's kind of what you're looking for. So basically, so going back to the step that you need to take is marking up your charts based on what the profile is telling you. So you want to draw your level right here and be prepared for the next day. So draw your level and say, this is where I'm expecting the price to react. And what's the level higher up, that you need to mark, and mark that level. And what does this do? Essentially, it trains your brain to look for that information. So once you start focusing on something, your subconscious mind, your brain will start looking for that stuff. and it will see it all the time then. So if you start marking it, it will start recognize it, because all of a sudden the brain thinks it's important to you, and it will start pointing that stuff out to you. And we saw this with, like, we see this with cars and other things like that. Anything you're interested in, let's say all of a sudden you take up a hobby, you become interested in that hobby, all of a sudden you start noticing that everywhere. You will start noticing things about that, like all around, and all of a sudden you would think, oh, just because I became interested in this, everyone else is interested in this as well. It's not that things have changed, it's just that your brain is filtering that information out for you, and you pay attention. It's like, for example, you're in an airport or something, and you hear your name come on the PA system. All of a sudden you snap, your brain, your attention snaps back, and you hear your name, whereas you could have had countless things going on the PA system, and you will never hear anything else. It's just white noise in the background. As soon as you hear your name come up, all of a sudden your brain just clicks into that, and you can hear your announcement, because your brain's filtering out for that, your name. So this is the same concept. It's a mind hack, if you want to call it that. It's just a mental exercise to make yourself learn the concepts a bit more. So if you start marking these things on a chart, you will start finding them a lot more in your trading. All right, so that's that, and that's what I have in terms of the market profile. Any questions or comments on that? Anything else that I can get into? Okay, so I am not hearing anything. So the last thing for me is, so I gave you everything for free. There's really nothing that I'm hiding here. You can do a search on market profile, you find a whole bunch of information. So my value that I can provide is not in terms of teaching the market profile, which of course I will, if you want to join me, but it's really around implementation. I consider myself an implementation expert. So a lot of times you will find people will go from one strategy to the next, I've done this myself. I've gone through one person to the next, hoping to find like a holy grail to trading and finding, the best strategy and everything else. What I've learned is that it's not about that. It's not about finding the best strategy. It's about implementing. And that's where I can help you with this. If you want to join me, we have a small group of traders, really committed traders. Since we started, doing this together, everybody has taken better trades, and we are all becoming more consistently profitable, which is what I stress the most. And in the group, we're all equal. It's a small group, so we get to talk a lot. We show each other our trades. We look at what the other person is doing, how they're seeing the market better, and how to incorporate those concepts into what we're doing. And it's the practice. We practice. And by that, I don't mean, Forex tester or anything else like that, which I do recommend as well. However, it's just the amount of repetition you get is quite high. And you heard Art was talking earlier. Art can vouch for that. The amount of touches we get with this, you get to ingrain this really into your brain, and you get to learn this information. So you can go to tradingwithvenus.com, work with me. And there you have, I have a couple of different options. We do daily analysis calls where we look at all the levels, and we look at where the market will go next. So we do that analysis. And if you do decide to join me today, send me an email, and I will do a bonus. And the bonus will be essentially, I will do a 1 hour strategy session. Normally, when I do one-on-one mentoring, I do charge for that. However, if you buy any of the daily analysis calls, and on the weekends we do a training session like this, so if you buy any of that, I will give you a free session, and we can look at your own individual needs to see, what are the challenges that you are having and how I can help you. And there's no cost for that. I won't charge you for helping you. If you're part of the group, then we'll help you anyway, so you don't really need to worry about that. So there you go. So that's all I have. And thank you so much for joining me today. I appreciate your time, and I hope you learned something today. And if you want to come check me, feel free to come check me out. We'll do more webinars in the future. You're welcome to come join them whenever you have time. So thank you very much once again for coming to the webinar. And I will stop sharing here now.